What's going on, beautiful people? It's Joe, aka the Nomad Investor, where dividends freedom anywhere is the goal. And today we are back with another portfolio update. So let's dive right in. Currently on the channel, we are at 1,142 subscribers. So shout out to everyone who has been supporting this journey of mine. I am at 53 videos on the channel. I'm currently filming the 54th video, which is also the 51st portfolio update. If you guys are new here and haven't already, make sure to smash that subscribe button. It helps keep me motivated to continue making videos like these and, most importantly, documenting my journey. And if you are not new here, and to everyone else, make sure to smash that like button, as it helps with the YouTube algorithm as well as growing this channel. Now, as always, the videos on this channel are for informational, entertainment, and educational purposes only. I am not a financial professional or advisor, and nothing here should be taken as financial, investment, or tax advice. Investing always carries risk, and those seeking financial advice should seek out a registered professional. If you are new here, this is my refined game plan and goal 2.0 for growing my small portfolio from $0 to $1,000 per month in dividend income while experiencing some growth. And the way that I am doing this is, first, I have two sources of income. One is remote work income. It's pretty stable, pretty consistent, pretty reliable. And the other one is business income, which does fluctuate up and down depending on the seasonality of things. But basically, I have committed to contributing anywhere from $300 to $1,000 per month into my Robinhood taxable brokerage. And I'm treating this brokerage like a business with the goal of aiming for 30% plus high yield. And the way that I hope to achieve this is through primarily investing into high yield income ETF vehicles, such as, but not limited to, WPay, HOW, QDTE, XPay, XCTE, blocks, etc. There's so many. You guys can look at the list if you want. And I am going to be implementing the core satellite investing strategy, the core satellite investing approach, where I will be alternating between core anchors and core anchors and satellite position ETFs in my specific case. So you guys can do your own research on that if you would like, or there's a really great video by Eugene Vasquez on YouTube where he kind of breaks this down flawlessly. Now, I will be reinvesting the dividends, so 50% will be going into income and 50% will be going into growth positions. And as you can see, for the high yield income ETFs, I'm basically going to be reinvesting back into my high yield income cores, such as QQQI, blocks, SPYI, and QDTE. And for the growth ETF side, I will be dripping into my growth positions, which in my case is just VGT, but I may add some more in the future. So drip plus always compounding is the portfolio growth strategy. And on the income side, the goal is to grow my income as time goes on. And for the growth side, it's capital appreciation as time goes on. Now, my plan is to use the income that is generated, or the distributions that is generated from these high yield income ETFs, to invest more into my growth positions. That way my portfolio as a whole begins to grow, and I'm basically growing cash free, if that makes sense. So basically, I'll be rinsing and repeating this until my account hits $1,000 a month in dividend income. And from there, I will reevaluate and see what the new goal would be when this time comes. Also, disclaimer, none of this is financial advice. This is strictly for entertainment purposes only. I'm just simply documenting my journey and showing you guys what I am doing along the way. Do not follow me, do not copy me, or any of that jazz, because I'm just some random dude on the internet. Now, real quick, I did want to share this for those who aren't aware, but these are my dividend income milestones while I grow my small portfolio. And this is so I can celebrate the small wins leading up to the bigger goal along the way. Now, because I recently made some changes with the portfolio in terms of adding a growth component to it, I will be creating some goals focused around that. But for now, you guys can pause this and see all the income goals, the income milestones that I have leading up to the big goal and final goal for this specific journey, which of course it's never going to end. I'm going to continue doing this for as long as humanly possible. We are looking okay-ish today, and we'll kind of cover the futures a little bit later, but I am at $1,120.30 in cash currently in the portfolio, and I have $8,138.73 in margin currently. So my total buying power is $9,259.03. Now, let's quickly dive into each position here, but just a quick overview. As you can see, I'm in the green on everything but my VGT position. So who knows, I may possibly scoop up maybe one more share. We'll see. But yeah, let's dive right in. Okay, so starting with VGT, it's currently at $775.93 a share. My market value is $2,327.79. I am down $4.71 or 0.20%. My average cost per share is $777.50. I have 3 shares with a portfolio diversity of 45.82% and a maintenance ratio of 25%. Next is SPYI. It's currently at $52.70 a share. My market value is $579.70. I am up 88 cents or 0.15%. My average cost per share is $52.62. I have 11 shares with a portfolio diversity of 11.41% and a maintenance ratio of 25%. Next is QQQI. It's currently at $29.08 a share. My market value is $494.36. I am up $11.09 or 2.29%. My average cost per share is $28.43. I have 17 shares with a portfolio diversity of 9.73% and a maintenance ratio of 25%. Next is JEPY. It's currently at $57.97 a share. My market value is $405.79. I am up $27.01 or 7.13%. My average cost per share is $54.11. I have 7 shares with a portfolio diversity of 7.99% and a maintenance ratio of 25%. Next is NVDW. It's currently at $42.99 a share. My market value is $343.96. I am up $9.89 or 2.96%. My average cost per share is $41.76. I have 8 shares with a portfolio diversity of 6.77% and a maintenance ratio of 30%. Next is Blocks. It's currently at $20.50 a share. My market value is $287 flat. I am up $28.60. Or 11.07%. My average cost per share is $18.46. I have 14 shares with a portfolio diversity of 5.65% and a maintenance ratio of 25%. Next is QDTE. It's currently at $35.10 a share. My market value is $245.70. I am up $7.20 or 3.02%. My average cost per share is $34.07. I have 7 shares with a portfolio diversity of 4.84% and a maintenance ratio of 25%. Next is GOOW. It's currently at $73.99 a share. My market value is $147.98. I am up $5.38 or 3.77%. My average cost per share is $71.30. I have 2 shares with a portfolio diversity of 2.91% and a maintenance ratio of 30%. Next is HOW. It's currently at $62.01 a share. My market value is $124.02. I am up $25.80 or 26.27%. My average cost per share is $49.11 a share. I have two shares with a portfolio diversity of 2.44% and a maintenance ratio of 30%. And then last but definitely not least, we have PLTW. It's currently at $40.86 a share. My market value is $122.58. I am up $18.33 or 17.58%. My average cost per share is $34.75. I have 3 shares with a portfolio diversity of 2.41% and a maintenance ratio of 40%. Now hopping over here into the dividend sheet that we have here, I like to take a look at market return and total return. So starting with total return, which does include the taxes deducted from it and the dividends or distributions included within it. Okay, so I am up 12.83% for Blocks, 29.82% for HOW, 4.06% for NVDW, 18.50% for PLTW, 5.49% for GOW, 9.13% for JEPY, 4.71% for QDTE, 3.39% for QQQI, and 0.23% for SPYI, and we are down 0.15% for VGT in total return. Now hopping over into market return, we're up 11.59% for Blocks, 26.53% for HOW, 2.51% for NVDW, 15.68% for PLTW, 3.52% for GOOW, 7.61% for JEPY, 3.11% for QDTE, 2.50% for QQQQ, 0.23% up for SPYI, and also down 0.15% for VGT. Now, if we hop over here into the dividend log, let me zoom over here just to kind of keep you guys updated. So I have not received a distribution today, but I will receive a distribution from JEPY tomorrow. But for the month of December so far, I am at $23.86 in distributions paid. And for the whole entire year, I have received over $607.83. And then if I look at the week that we are currently on right now, I have so far earned $10.12 this week. And for achieving my goal, my distribution or income goal, I am $976.14 away from achieving it. And I'm only at that, again, $23.86 distributions paid. Now, hopping over here onto X, if you guys aren't following me, I would really appreciate it if you could. I'm currently at 58 followers, and I have a, I guess, somewhat ambitious goal of achieving 100 followers on here. So if you guys could give me a follow, that would mean the world to me. But basically, I like to post updates live on here. So whenever I buy something, whenever I sell something, my opinion on the markets, my sentiment overall. Sometimes I reshare other people's posts, and also just anything pertaining to the markets, really. So if you guys give me a follow, that would be great. It's at I'm Nomad Investor. Again, that's at I'm Nomad Investor. Moving on, this is a post from Kalshi. It says, breaking, odds of a 25 base points rate cut tomorrow reach an all-time high of 95%. So we take a look here, and I love this Naruto Uzumaki GIF that they put here. It said it's happening. But yeah, this is what it's looking like. So 95% people are predicting that there will be a 25 base points cut. 6% say that Fed maintains the rate, and 1% says it cuts, I guess, cut above. So it doesn't cut or something, or raises. I'm not really sure what that specifically means. Greater, that it'll cut greater than 25 base points. Excuse me, I totally read that wrong. So that is from Kalshi. Next, we have one from NEOS Investments. Today, they are launching NLSI, which is the NEOS long/short equity income ETF. Very interesting indeed. It said it seeks high monthly income, offers upside potential, proprietary investment process delivering long and short exposure to U.S. equities. This may potentially be a very, very appetizing position. So I will definitely be looking more into this. And when I do learn a little bit more about this, I will share it with you all. Next is a post from High Old Hustle. I just wanted to share this one because, number one, I thought it was hilarious, but at the same time, it's kind of true. So it's High Old Hustle says blocks with that little smirking emoji face, and 36% yield, no NAV erosion. So far, this has proven to be true. Of course, things could always change in the future. However, we are really hoping and praying that that doesn't happen. Next, we have a post from Top Dividend ETFs. He says five ETF portfolio that covers income and growth. QQQQ and QQQI, VOO and SPYI, then BTCI. This is very interesting. So you got 2 growth positions, and the rest are 3 income positions. I think this is a pretty good portfolio. Unfortunately, I am not in a position to do this at the current time, but who knows? Maybe in the future I can make some tweaks. And I've already got an SPYI. I have a KQQ instead of QQQI. I don't own VOO, and I don't own QQQ. I mean, I think with VGT I pretty much got the QQQ NASDAQ covered. I don't have BTCI, as you guys know. I have blocks because it's a weekly payer. But BTCI has performed pretty well. Very impressed. And again, these are the income ones are all NEOS funds, which I can't blame Top Dividend ETFs for making this portfolio example, because the truth is they're the most reliable. They're the most stable. They're not going to have NAV erosion. At least they haven't had so far, to my knowledge. And yeah, what do you guys think about this specific 5 ETF portfolio that covers the income and growth? Would this be something that you think is worth doing? Comment down below. And then last but not least, we have another one from High Old Hustle. which says the pros, cons, and use cases of popular high yield funds. You can't just buy any and everything. You have to know how to use these funds properly. The best way to know how to use a fund is by understanding these pros and cons. So let's break them down. NEOS. Pros: stable NAV, consistent yield. Cons: lack of growth, mid-level yield. NEOS funds are all about the long term. They won't print you a 50% bag in a matter of months. What they will do, however, is provide a stable foundation. That foundation will compound into major wealth over the long haul. The yield might not be the highest, but you can withdraw it all, unlike many funds. This makes it ideal for living off of your portfolio. So that's pretty cool. Next, Curve. Pros: stable NAV and solid 13 to 37% yield. Cons: some capped upside. Curve is the go-to for a multi-year long in single stocks. The reason being is the balance between yield and NAV. They are one of the few issuers that provide single stock exposure in a set and forget manner. You won't get 80% yield here, but what you will get is high total return. Next, X funds. Pros: growth potential and stable yield. Cons: volatility. This is true. GX and blocks especially have the perfect bull market strategy. They employ call credit spreads on some of the holding. The rest is long stock with a put credit overlay to not cap the upside. This leads to massive growth on top of the dividend. With blocks in particular, its holdings come with massive volatility, but that goes with the territory when it comes to crypto. The overall build out is ideal for the long term. So that's very interesting. Next is REX shares. REX shares, growth and income. Pros: ultra high yield and growth potential. Cons: leverage leads to massive volatility. I deem these as trading vehicles or a hands-on long. They use 105 to 150% leverage. What that means is that entry point is crucial. You can't just fire off buys with no plan. Half of the holding is left to run for upside. The other half deploys a covered call strategy. This helps performance in chop to down markets. Roundhill. Pros: ultra high yield, monster growth. Cons: leverage volatility and dividend dependent on price change. These are the perfect trading vehicle. Why? Because there is no capped upside on 1.2x leverage. Since they use swap agreement, returns are entirely dependent on price change. This means that your entry is absolutely everything. So what do you guys think about this? Do you think this is a pretty good breakdown of each of these different funds in the high yield ETF space? Comment down below. I'd love to hear it. And if you differ in opinion, share why. Now, hopping over into Yahoo Finance, this is a couple headlines. These are a couple headlines that I wanted to quickly read. It says there's no guarantee the Fed cuts will lower the rates that matter. Here's why the bond market and the Fed rates cutting appear out of alignment. And then the next one is US futures slip with Fed on deck. Then we have Oracle set for earnings, reveal as Wall Street looks for AI cracks. And then Alibaba, ByteDance, keen to order NVIDIA H200 chips. So I really did want to announce this. This is very good for NVDW and any NVIDIA position, I believe personally. So this is really good for my NVIDIA position, which in this case is NVDW, because Trump has approved, if I remember correctly, he approved that NVIDIA can sell their H200 chips to China or in China, to China. So this is very good news, at least for the short term. We'll see how this continues to impact the stock market as a whole, let alone the NVIDIA stock. Now, hopping over into futures, it says, the S&P 500 is currently at a neutral. It's not positive. It's not negative. Same with the Dow. The NASDAQ is down 0.08%. The Russell is down 0.18%. The VIX is up 3.07%, which is currently at 17.45. And gold is down 0.16%. Anyways, guys, I hope you enjoyed today's video. I know we didn't cover too much, but of course, I have a lot of positions that I got to get through. And there's only some news that I really wanted to share with you guys. So if you guys have any suggestions, questions, feedback, comments, or whatever, comment them down below. I'd love to read them, and I'll do my best to respond. But I at least promise that I will read every single one of your comments. And yeah, if you guys have any other topics, any other positions you'd like me to take a look at and maybe do a little bit of a deeper dive into, other than the new NEOS fund that I mentioned in this video, comment them down below as well. I'm always looking for an opportunity to dive deeper into other positions that I'm unaware of. With that being said, until next time, guys, peace.